Good morning, everybody. Joe Ciaccio here. Hope everybody had a fantastic weekend. Happy Monday to everybody. Got some requests last week to do a call on how to swap a policy. And what I've come to find out is that a lot of agents just want to flip the policy to make commission. Anything wrong with that? Well, yes, but not really. Before you switch a policy, you have to be ethical and feel very confident that the client is going to be approved, not saying what they say, yet sometimes we know the inside story. They have that medication that they may not have used, that may not show up on the RX. They may have had something happen to them within the last period of time, and you kind of want to sit and say, well, like, what's an extra 3 or 4 months to make this switch? Because when you switch a policy, you can't hurt the client. When you switch a policy, the 2-year contestability period starts all over again. So when you have a policy, there's a 2-year contestability for when the policy grows. Got nothing to do with money. It's to where the carrier can sit and look back on the last 2 years, if it's been within 2 years since you wrote it, to sit and say, you know, Jack, what you wrote was good, yet this question you answered incorrectly. Here's the sad part. The client tells us what we think is the truth. You do a phone interview on the client, and they say everything is okay, and they give you the green light. So you need to be very, very sure that what you're doing is the right thing for the person you're sitting with right in front of you, because they're putting their trust in us. We're the professionals. We're the ones that know how to do it the correct way. So when we go to somebody's home or you're on the phone visiting with somebody, before you replace a policy, just totally try to make sure you cross your T's and you dot your I's to make sure that nothing's going to come back and haunt their family when you decided you want to switch. You don't switch a policy just because you want to make money. That's totally wrong. You switch a policy because there's a need and there's a value and it is good for the client. We cannot always be thinking about our pockets, even though that's our job. Our job is to make money. Our job is to make sales. Our job is to have the client buy from us. Yet, you need to be ethical and you need to be trustworthy, because there's no pillow so soft as a clear conscience, is one of my sayings when you go to bed at nighttime to make sure you do the right thing. Now, all whole life policies, all final expense policies that we deal with, all have a cash value. Some have a paid up in additions, and some have extended term. Those two additional. Paid up in additions, paid up life insurance is what it says, and extended term life insurance. Some come with all three, some come with only the cash value. When you go to a client's house, the first thing we're going to find out is why they sent the card in. We're going to do a normal warm-up. We're going to ask them if they have life insurance, do they have a burial program, and you're going to ask, you know, who do you have it with, or can you get it for me so I can review it? So you're going to look at this policy, and you're going to go, okay, the client has a policy for $7,000. They got it 4.5 years ago, and you're thinking about maybe switching it. There are some carriers whose prices are high right off the beginning, and ours are very low. So sometimes, I say maybe 4 years is where it is okay for you to switch. Depends on the client. I'm going to give you some examples on what's happened. Go to a client's house, you're visiting with them, and it's 5 years. You need to be careful to do it, because normally they're going to be paying more than what they have. Some clients do not care because they want that cash value. They'll sit and say, I don't care if I got to spend $15 a month more. I'm getting $2,500, I'm getting $1,500, whatever that number is. Some clients don't care. So now you need to take a soft step forward and say, you know something, I'm going to do this here for you. And you need to make a little piece of paper saying, you know, on this day here, I replaced this policy. And Mr. Jones felt that it was okay for us to give him $1,572 in cash value, knowing the new policy he got, for the same value is going to cost him $15 more, tell him to please sign it. Always cover your butt, guys. Always. This is why E&O insurance is so necessary, because if some family member or a spouse is there and they feel after the fact what you did was not in the best interest of the client, and that client dies within the next 2 years, you have a great chance of them coming after you for an E&O lawsuit. So just be careful. Not to scare you, to make you more aware, to be more cautious, to do the right thing. Now, I'll give you some examples. Jack Skagg and I were down south 6, 7, 8 years ago. And we were visiting in an area, and we walked to the lady's house, walked in her house. Well, she knew she had a policy. I don't remember what the face amount was. Yet when we brought it out, I think Jack was the lead on this one here. He says, yes, ma'am, you have a policy. You've got, I think it was $700 or $900. I'm not exactly sure again. Here, but the point I'm trying to make is that she wanted to cash that policy and she wanted that money, yet she still wanted insurance. So she insisted. We asked all the health questions. We even told her to give us the medication, because with these certain circumstances, when you're replacing a policy, it's amazing how your memory will go back and remember a lot of the things. Gave us all her medicines. I know for a fact Jack asked her, have you been on any other medications that you have not used or no longer take, that you've had filled up to like about 3 years ago? She goes, no. Her health was great. She ended up getting the money back and getting a smaller policy and paying the same premium. Why? Because she wanted it. Was it the right thing to do? Yes, because she wanted it. Jack and I both looked at each other, we crossed our T's, boom, we dotted that I. She wanted that money. So if we wouldn't have done it, somebody else would have. Is that unethical? No. To me, it's what the client wants, and they know what they're getting, and they understand they're going to get $2,000 less, and they're going to be paying the same premium, yet they're going to keep that money, they're happy. Now, here's a situation that you go to a client's house, they want that cash out. And they want that cash out because they just want it in their checking account. So they got a policy for $10,000 and they've had it for a while. You cash it out and they get $2,000 or close to $2,000 worth of cash value in their checking account. Then to do an $8,000 policy is really not going to harm them, because theoretically they've got 8 and they've got the 2 in their checking account or savings account. Now what they do with the money after is totally up to them. We can't control it. Yet when we left, we did what the client wanted. They had 8 in a new policy. They had 2 in their savings account. They were set. Years ago, an agent called me, said, Joe, I want to know how to replace the policy. Gave a little Reader's Digest. He says, okay, Joe, she's not in good health, but I'm gonna flip it. I said, what? I said, no. Tell me about her. He was going to take her from a regular simplified issue immediate benefit policy, which she's already had for more than 2 years, take her out of that policy, give her a cash value amount, and then do her a 2-year guaranteed issue. I told him on the phone, I said, that is not the way you replace the policy. You're doing her an injustice, because now she's got to live for 2 more years to get that money, and the amount of money you gave her is like 15% of what the face amount is going to be when you rewrite her. I said, it's not smart. He said, but Joe, she wants smaller premiums. I said, okay. I said, what I would recommend you to do is call the carrier up. Tell them that the client wants to reduce her face amount and see what their rules are. Now, what I do know is that if you do that with some carriers, and you got the policy at age 61, and you want to reduce it at age 65, they're not going to give you the age 61 rate, they're going to give you the age 65 rate, so sometimes it doesn't even pay to even do that for a client. Yet, there is an exercise in doing that, is learning different aspects of replacing a policy, learning the carriers you work with to make sure what you're doing is the right thing. Now, when you move a client from a policy to another policy with a replacement. As I said shortly before, you gotta make sure they're in good health. You gotta make sure that they're not taking medications that they're no longer taking that could adversely hurt them if something happens to them in 2 years. When you replace a policy, you must do a replacement form. If you don't, you're an insurance violation and you can go to insurance jail. Because what happens is that if you do a policy review and you replace the policy, you got to make sure that when you do that policy exchange, that you let that client know that you are their new insurance agent. You are the only one they're going to speak to. And they trust you to do what they wanted because they see the value of what you're doing. You must let them know how long you've been in the business. Let them know what you're doing is above board. Let them know that the other agent, when he receives that replacement form, and he is in a mood that he wants to call that client up, there's a very great chance of that past agent talking bad about either you or the current carrier you mess with. So you need to make sure that you seal it up with a little bow tie, put it on tight, and tell them the other agent will be calling you. Most of the time they call. He's wanting to know why you did it. Can I come over to review it? Can I come over to see what he did? And you need to tell him, no, I'm very happy with what I've done. I'm very happy with this agent here. Thank you very much. You never sent me a birthday card. You never sent me a thank you card. You never followed up with me. Joe, I think will do a much better job than you, and I feel more comfortable with him. So you must tell your client, snip it in the butt when you do a replacement because the other agent is probably going to call. Now, listen and say you do not do replacement form because you don't want one. And that other agent happens to call, just happens to call, or he's going through his bank statement or his individual account with the carriers and sees that Miss Jones canceled her policy. No more trail commission. He may say, well, hell, let me give her a call. So he's going to call her. She's going to say innocently, because you didn't tell her to say nothing, say, Miss Jones, this is Larry, your agent. And she's going to be kind of startled because she thought the agent was Joe. He's going to sit and say, I see how you no longer have your policy. What happened? She says, well, I canceled it and I moved to another one. That agent wants to be a horse's behind. You can call up that insurance company and state, the insurance company you represented, and state, this agent here did not do replacement on my client. They will get a hold of you and they're going to find out why you didn't do it. Be careful. Now, this here is a Royal Neighbors table of non-forfeiture and loan values. They have a cash value or a loan amount. They have the participating paid up life insurance feature as well as the extended term feature. Every policy has a cash value. The cash value in these policies do not go to the beneficiary when they die. The beneficiary will get just the $7,000, $8,000, $10,000 policy you write. Reason for cash value is that in the beginning you're overpaying your premiums, letting that cash value grow. So as you get older, your cash value will still grow, yet at a smaller rate because the cost of insurance has gone up. That's how they keep everything level. They overfund the cash value, then they start either pinching from it or they don't contribute to it as much because the client has gotten older. Cost of insurance. Second one is a paid up policy. Now I'm going to give you an example in a second on this particular lady here. A paid up policy, which means the client makes no more payments. You look at these at the chart and this is what's going to be paid up. No more payments, they got X amount of dollars of life insurance paid up. So when they pass away, the new policy they get with you plus this paid up addition, they'll get both of them at the time they pass away. Or they have the third one, which is the extended term. Now, on this particular one here, the extended term is 4 years and 29 days. What that means is that if the client cancels a policy, these are the three options they can do. This lady here purchases when she was 61 years old. She's now 65. Hold on one second. When you look at the table of contents here, where you have all these prices or these values here, when you look at age 65 and you see a number of $462.70, that is at the end of age 65, okay? The end of the calendar year that they purchased that policy. So when you look at it, you see 462, it can either be that or it could be less. So if they're in between the 4th and 5th year, that difference is $150. They're going to get $75 less in cash value. Call the carrier to find out exactly, or just do the math and give them a roundabout. Tell us to be $15, $20 higher or lower. The participating paid up portion, this lady will get $930. No more payments. She's got a policy she's put in her drawer for $930. Made payments for all those years. Extended term, if the client needs the money, they cannot afford the policy. The doctor says, listen, you got less than 2 years to live. God bless you if you make it more. Yet based on what you have, it's going to be challenging. So that client can then elect to make no more payments and get the same face amount that they have, $7,000. Same face amount, $7,000. And they make no more payments for 4 years and 29 days. They pass within 4 years and 29 days, their beneficiaries gets the full 7. Here's the scary part sometimes. The client lives 4 years and 29 days, they have no more coverage. So you need to kind of sit and let them know what the rules are, let them know how it works. Most people can first get the cash value out, then do a paid up, and then do the extended term. Yet, everybody's thought process here is totally different. If they need the money now, they're going to get the cash out. If they kind of need the money, but they really don't need it, yet they don't want to make the payments some more, they can do the paid up in additions. Or, if their health is not good, pancreatic cancer, first thing I can think of, they got some high stage cancer or something wrong with them, they may say, hey, the doctor's going to give me 2 years. If I'm lucky, I'll make it 3. If I make it 3.5 years, God bless me. They said, Joe, I got 4 years and 29 days. I'm going to roll the dice, make no more payments, elect that option, and get my full $7,000. You may do that. Now, some agents will let the client do that, and then the client's going to say, well, you know something, I do kind of want another little policy. What can I get now, even if it's a 2-year return to premium, or if it's a modified, depending on what their health is. They may say, I want that 7, yet I want to use the 50 I got. I want to keep 10 for my expenses, and I want to use 40 to buy another policy. Can you do that? Yes, you can. Must be in the best interest of the client. Yet if the client is telling you what they want, kind of either make a little note, have them sign it, or just run for it and do what you got to do. When you replace a policy, try to get the information on what they have. Clients do not know what their face amounts are most of the time. 90% of them will remember the amount that comes out of their checking account. They usually don't remember the carrier, the face amount. They just not that they don't know, they don't recollect it. They know that it comes out of their account on the second Wednesday of the month. They know that. They know the payment is $57.42. Unbelievable how they remember that. Yet they don't even know the name of the company. And the best part is, they got no idea where the policy's even at in their house. So the opportune time to find out exactly is to tell them, Ms. Jones, I need that policy. I don't know where it's at. I said, well, I got a couple phone calls I got to make. I got a couple emails I've got to make or to do. Get that policy for me to let me look at it, and then you're going to put it in a different spot, because when something happens to you, you pass away. If you have no idea where it's at, how are your children going to find it? They get the policy. I carry these little red folders here. these little red manila folders here. Okay? Little simple thing, just like the off-white ones, these here. I tell, so let's put your policy in here. You're gonna put it in your top left-hand drawer. You're gonna tell your kids if something ever happens, go to that little red folder I just showed you. That's where all my important papers are. To wrap it up. Doing a replacement is good to do. If it's valuable, smart, and the client really wants to have it done. Some agents do it just because. I believe in being more protective of myself because I enjoy my license, I enjoy working, and I do what's best for the client. There's no pillow so soft as clear conscience, so you need to make sure you're ethical, you're above board, and you're being trustworthy on what you do. What I'm gonna do, I'm gonna open up. Does anybody have any questions? If you do, give me a 5-star. Hit the number 5 and hit the star button. And if you have any questions, I'll answer some. Okay, everybody's not wanting to raise their hand. So with that said, guys, making a great day. We'll see you on the call Thursday. Be good, hit them hard. If you need anything, give us a call. Jay says CVS is in more states now, and the lead programs are starting to pick up. More agents are starting to get back into the direct mail. So when you're ready to pull the trigger, give us a call. Thank you, guys. Make it a great day. Bye-bye.